Hey everyone, welcome back to another episode of the Integrating Investor. I am Seth Levine of the Integrating Investor website. Thanks so much for joining us again. Glad to be back. I'm going to take a little departure from what we've been doing in the past and do a solo episode. I mean, it's definitely been a while since I've done one. We had some great interviews, and Jim Brown has been coming on the show as a co-host to really lay out his thoughts on money and banking. I hope you've enjoyed that. If you haven't, I definitely recommend checking out some of those past episodes. I think it's really interesting. Jim, I don't want to say a contrast because we agree on a lot, but it's definitely a different perspective on money and banking. And the fact that so many of us are looking at those issues now, I think it's interesting. So hopefully getting these different perspectives are adding to your own understanding of these pretty complicated issues. Jim will be back to finish a series. He's just taking a little bit of a break. I think it'll probably be in 2 weeks, but stay tuned. I've got a show here today. I think it's going to go long. I think we're going to go into 2 episodes. So Jim will definitely be back after we wrap up this series that I'll tease you with right now. As always, please like and share the show. Help me get the word out. That like button's right there. The thumbs up button, you hit it right now. You don't have to worry about it later. Just take it off your mind. And if you don't like it at the end, you leave in the middle. You just unlike it. Or thumbs down it or whatever. Right. Always, please, check me out on Twitter. That's where you can find me the most. I'm also on Instagram to a much smaller extent, but love to engage with people on social media. Also, check out the website to subscribe to get my monthly emails. You would have gotten the one that we're going to talk about today already. And as always, please use that super chat function. I'll try and monitor the chat pretty regularly, but super chat is the best way to get a hold of me. And plus, you help out the Ayn Rand Center UK, which is a great organization. So, and lastly, feel free to email me with show topics and guest suggestions at info@integratinginvestor.com. That is info@integratinginvestor.com. So as we kick on to the show, you guys know we'll start with my favorite part as always, which is the disclaimer slide. I don't think we're going to be again bumping up against any issues here, but these are just my personal opinions and not investment advice or recommendations to purchase or sell any product, service, security. Don't listen to me for anything I'm saying for investment. Do your own work. Maybe there are conflicts of interest. I don't know, do your own work, make your own investments, and we could all move on from there. So today's show. So today, what I would like to talk about and discuss is China. If you've been following the investment markets, you may have known that the Chinese investment markets are a bit squishy these days. They're not doing as well. And they've been selling off pretty hard, to be frank. And this coincides with the political situation in China, which is, to say the least, intensifying. Now, it's a very complicated issue in my opinion. But thankfully, we don't need to be experts in order to make investment actions based on what's going on there. I think we can I know we can use some principles to help simplify it, and specifically the principles of centralization and decentralization to help analyze the situation that's going over there. And as I mentioned, this is really today's discussion, and probably next week is just going to be an expansion of my most recent article that you could find on my website. So, principles. We can use principles to really, for a lot of things, because principles help simplify the complex. And, as Ayn Rand identified, a principle is a fundamental, primary, or general truth on which other truths depend. Thus, a principle is an abstraction which subsumes a great number of concretes. It is only by means of principles that one can set one's long-range goals and evaluate the concrete alternatives of any given moment. It is only principles that enable a man to plan his future and achieve it. So Ayn Rand identified the power of principles, right, and has forever changed my life, for that matter. So how can we use principles in China, right? How does China relate to Rand and principles? Well, as we know, the world is incredibly complex. And of course, investing is incredibly complex, right? I mean, I don't need to tell anyone here that, right? So principles, right? Finding principles, can simplify the world and hence simplify investing. Because as I mentioned, there's some crazy stuff going on in China. And really how I see it, right? So I take these principles and I really see there being two concrete issues, if not more, but connected issues that are at least going on in the business world in China. First, we have what's going on in the technology sector there, right? There's a complete crackdown by Beijing and the Chinese Communist Party there of the tech sector. And that's been going on for, throughout the year, pretty much. But there's also the Chinese real estate sector. And most notably, Evergrande Group. The Evergrande Group has made headlines. And there's a lot of worries that, hey, they may in fact default. Now, I see the connection, right? What's the connection here? Now, for me, I see these as basically a power struggle between economic and political factions, right? There's a struggle going on between economic power and political power. And I've touched upon that in past shows. And to me, it's just really not so naked. It's pretty much fairly obvious, I'll say. I mean, maybe that's an overstatement, but this struggle between economic and political power is really as old as modern societies. We see it throughout history. So in my view, what we saw in China was this business sector that was growing massively over the past couple of decades and amassing all this wealth, right? And with that wealth comes influence and power. Now it's economic influence and power, but it's power nonetheless. The Chinese Communist Party is political power, right? It is government, so it is political power and of a different nature. The difference between political power and economic power is pretty, Ayn Rand touched upon this, but also other thinkers like Von Mises, where economic power deals with voluntary interaction, but political power deals with force. So I think the Chinese Communist Party was seeing all the power, for lack of a better word, being amassed by the economic players and got a little bit jealous, right? Or saw it as a threat, maybe, is a better word, maybe, to their political power. So the Chinese Communist power being force, right? Being government, being force, really just took that force and I think is using it to diminish the business sector's influence over the Chinese people. Right. So we have business on one side in loose terms, which is, voluntary exchange and thus moral, in my view. And we have the political Chinese Communist Party, right, which is government, which is force on the other side, which is, I don't want to say immoral, but has a very defined place where it's moral, and outside of that pretty narrow bucket of defending individual rights, broadly, very loosely speaking, is immoral. Now, what's going on in China, in my view, is nothing short of tragic. It's tragic for investors, of course, who are learning another hard lesson in investing in China, which I'll touch upon in a second. But it's really, tragic for the Chinese people, right? The population living there. They're seeing their progressively increasing living standards and the political freedoms that they've amassed over the past couple of decades. They seem poised to reverse, right? They are eroding by the day. So what this means for investors and what we're seeing is that, in my view, China is more centralized than what was believed, in my view. And as a result of that centralization, it's more dangerous and, from an investment perspective, more expensive than what I think many people probably thought. And that really does not bode well for portfolios, nor does it bode well for global growth. So let's look at the tech sector first. So here is what I'll call the Chinese tech sector, the tech rec, right? WRECK. This is the iShares Hang Seng Technology ETF. So just a compilation of Chinese tech stocks. And we could see here, they're basically almost cut in half since from their peak back in February, right? If you peak to trough there. I mean, there's some really big companies that are down even more than that. And this has just erased a massive amount of wealth. We're talking billions or trillions of dollars. These are not small companies. These are really, really large companies. Why did this happen? How did just these stock prices just get cut in half, trillions of dollars or billions of dollars just erase, overnight? Well, the Chinese Communist Party started to crack down on the Chinese technology sector and companies specifically. Probably the biggest headline was Jack Ma's Alibaba, right? The CCP, right? The Chinese Communist Party threatened to break up Alibaba. First, it hit it with a huge fine, a $2.8 billion fine. Then it's threatening to kind of break it up. And quite honestly, who knows what else, it's done behind the scenes. But whatever it did, Jack Ma, right, the founder, right, of Alibaba, basically went into hiding. And you see this kind of in the news, like, where's Jack Ma today? He's popping up in all different places, but he's laying very low. And that's pretty obscure, pretty abnormal behavior. But it's not just Alibaba, right? This sort of crackdown on Chinese tech companies has spread to other companies and also other sectors within the Chinese economy. In May, the Chinese cyber regulator accused 105 app companies of illegally collecting and using personal data. Now, we don't know what the merits were. Maybe that's true or not. But again, this is the CCP we're talking about, and I think we have enough grounds here to be suspicious. Now, the Chinese Communist Party is doing all these crackdowns, really under the guise of cleaning up anti-competitive practices. But how I see it, it's just the CCP is exerting its influence over some of the largest companies in the world. Right? They're fining them, they're threatening to dismantle them, and who knows what else, for the most part. So is it just cleaning up anti-competitive practices or play here? So it's no surprise, as an investor, that we're just seeing equity markets completely plunge. So check the chat reel here for a second before moving on. MA, thank you so much for your super chat. Thanks for joining us. Yeah, and nothing else. Chat looks good, so we will keep moving on. So as I mentioned, it's not just the tech sector where we're seeing this, but throughout other parts of the Chinese economy, right? Real estate, the real estate market is really has now come into focus. And specifically, or at least the biggest headline is the China Evergrande Group, like otherwise known as just Evergrande. Now, Evergrande is basically flirting with default. According to CNN, it has over $148 million worth of unpaid interest that was due last month. I mean, that is just a massive amount of money that's due to creditors. So they're in this grace period window. Just to put things in perspective, China Evergrande Group has over $300 billion in liabilities. I know that, that's a lot. Let me just say that is a lot. And it's hard to really grasp that, number, but just to put things in perspective, that's about a third of the size of the entire US high yield market, right? The entire US high yield bond market is about $1 trillion. And, Evergrande would be about a third of that. So just think about that. Now, what happened with Evergrande? I mean, let's just be honest here, right? Like, real estate is a huge part of China's economic growth, right? It's just been building, and there are all sorts of incentives and schemes in the Chinese, real estate sector that are all kind of in place to try and help the building of China. So it's not exactly like the real estate sector was probably healthy. It's not exactly like the real estate developers who play in that space were healthy either. However, specifically now, I see changing in the government policies and attitude towards real estate developers really as the catalyst for all the troubles that are hitting the space. As an example, one of these changes is known as the 3 red lines policy. This is a newly implemented policy that kind of impedes property developers from refinancing their debt. Now, if you know anything about real estate development, debt plays a huge role in their business models, right? It's a common practice to borrow debt in order to develop your properties and real estate, and then sell it and repay the debt. For better or for worse, that's sort of how the industry is structured. So when you pull the rug out of these companies, when you remove that avenue of potential of debt repayment, what's left? Now you see Evergrande trying to sell unfinished, trying to sell unfinished condos and really scrambling, but these companies have very few other options, and a lot of people are asking, will we see bailouts or will we see liquidations? Well, if you look at the markets, liquidations are becoming a pretty material probability. So the blue line in this chart. So here I just picked three developers, real estate developers in China. The light blue line is China Evergrande Group. You could see it's basically going pretty close to zero. The scales in this are pretty big, so it's really hard to see how big these losses are. But China Evergrande slipping, pretty much on its way down to zero, down from, looks like, just over $10 or so down almost 80%. There are other substantial losses here. There's Country Garden Services, there's Sunac China Holdings. Some of these are down greater than 50%. These are not, and very quickly, just in a couple of months. These are not normal market behaviors. These are all catalyzed by what's going on in the political and in the political environment in China, and the impact of how those feed into the real estate market. So as I mentioned, these do not seem like unconnected events to me. Right? What's going on in the tech sector, the kind of changing attitude towards the tech sector, what's going on in the real estate sector, the changing attitudes, the of the political environment towards the real estate sector, they seem connected to me. The connection is a growing centralization in China's political economy, right? We're seeing the Chinese Communist Party intervening more in the economy and imposing its will kind of on individuals and companies in the economy. In other words, the Chinese Communist Party is struggling for power over the economic realm that is traditionally there for businesses. Now, the CCP is not just grabbing power or attempting to grab power in the economy. It's also making a bunch of political power grabs too. Right? We all know what's been going on in Hong Kong, right? They stepped in a couple of years ago to try and take it back early, ahead of schedule from Britain. They've been inserting their own government there, and also making it a lot harder for basically trying to integrate Hong Kong into China, right? That is a political power grab. It's also been threatening around Taiwan as well, right? It's trying to influence itself over Taiwan and reunificate. I totally screwed up that word, but basically make Taiwan another part of a part of China too, which has some pretty important geopolitical implications. So we have the tech wreck, right? What's going on? The technology crackdown. We have the real estate crackdown, right? Two of the probably biggest sectors in China. We have these political maneuverings on the outside, but we also see some internal party politics playing out right now too. So I grabbed this just this morning off of Bloomberg. Sorry, not Bloomberg, off of Twitter. It is a Bloomberg article. But here, this is from a couple hours ago, right? There are basically political purges going on right now in China, right? Here's the headline here. China arrests ex-police official days before major party meeting. A former vice minister of public security was arrested just a couple days before the important Chinese Communist Party gathering that is going on next week. So all over this past year, we have these events occurring. Now, if only it were alone, right? What is the connection? Well, it's just, if here's an article here from the Wall Street Journal. This was from September of this past year. Xi Jinping aims to rein in Chinese capitalism, bring back kind of Mao's socialist vision. Right? This is the connection that I see. I see all these events as a sad and troubling trend away from Western capitalism and liberalism, and basically, a step back towards kind of the Maoism, the socialist view that China was shedding over the past couple decades. And in my view, the result is going to be an end to China's newfound prosperity, and a step back towards, the sort of stagnation and a reduction in sort of prosperity and wealth that China had a couple years ago. Now, there's a lot of lenses through which we can look at what's going on in China, right? You could be a geopolitical expert. You can, look at valuations. There are a lot of lenses that we can analyze this through. What I like doing is looking at it through this centralization / decentralization framework, right? What is the system, and is it becoming more centralized or decentralized? Right. I've talked about this framework before, specifically when we're talking about the financial sector in some of the Bitcoin episodes. but I think it also applies here as well. Right? We don't need to be a China expert, or even or even a political expert or a classical liberal to think about China. We can really just look at how the system, and when I say system, how Chinese economic system, let's call their economy and financial markets a system, because it is a system. So we can look at that system through a system lens. And the lens that I'm advocating for here is looking at it in this centralization lens, right? Or a decentralization lens. So we know that China is, so take a step back, right? Centralization is as systems centralize, my view, they become more fragile. And as systems decentralize, they become more robust. Right? We'll just talk about these broad concepts now. I think I'll get back, I'll kind of dive into them in next week's show. So what I see in China is a system that is becoming more centralized. By centralized, I mean the decision-making are being concentrated into fewer and fewer hands, right? Those hands specifically here being the Chinese Communist Party, right? They are grabbing power and control over the economy. They're also grabbing power and grabbing control over more geographic land masses. And in my view, that's bad for investors. That's bad for the Chinese people. And like I said, it's bad for global growth as well. So looking at the chat here, MA, thanks again for your super chat. Falling prices are the unintended consequence of power grabs. Yes, I would say you nailed that. You nailed that, MA. So think of it this way. Actually, what I'll get into next week, it's not necessarily that falling prices are the unintended consequences of power grabs. They're probably the end result that is most likely to happen. Why do I say that? Well, because look at the events that led up to today, right? China putting so much emphasis on national players like real estate, or even technology to a certain extent, really facilitated those sectors from growing. Look at, for example, let's take an extreme example. Let's look at like Saudi Arabia, right? Saudi Arabia basically has all its eggs. Its economy is centralized into oil. So by having all your eggs in one basket, when that goes well, right, your prices can actually increase way more than you would intend to at first, because you are concentrated or you're levered to certain factors that could actually make your economy or your company or whatever you're talking about actually perform quite well in a certain period of time. But it's going to be fragile. So but when those conditions change, that fragility is going to show through pretty quickly and pretty meaningfully. And as a result of that fragility, right, the oil prices crash, right? The real estate sector hits a bump. The CCP steps in and starts breaking apart the tech sector ecosystem. Now what you see is those artificially inflated prices higher are now going to plummet lower, right? Because they've been built upon this kind of false foundation of stability that really just crumbles underneath you. Does that make any sense? I hope it does. So that is kind of where I think that's sort of a good place to kind of end the show today. We're at the top of the half hour here. Really wanted to just lay the foundation for what is happening in China. Lay it out as a power grab, lay it out as a political incursion into the economic world. And next week, we can see how the centralization, decentralization framework, how that really filters more into prices, how that filters into stability. And MA, maybe it'll do a better job at answering your question. So with that, little bit of a dense show that kind of flew by. Was not expecting that, but hopefully you found it interesting. Hopefully we're starting to get some clues to see how we can apply principles to investing. It doesn't all have to be bottoms up. It doesn't all have to be tops down, but we can use kind of a mixture of approaches for different situations. And here, I think a tops down kind of principled approach can actually work quite well. So everyone have a great weekend. Thanks for joining in. Thanks for watching live. Thanks for watching on the replay. If you like the show, please give it a thumbs up. Just a reminder. I'll be back next week to conclude maybe with the payoff for this episode, and then we'll be back with Jim Brown for him to finish up his episodes. So thanks everyone. Have a great weekend.